Another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the Emini futures contract and put together a trade plan for the week ahead, looking at some high probability action areas and some price targets to have in our sights. Before we jump into the charts, as always, want to take a look under the hood, so to speak, and discuss market narrative, market dynamics, performance from last week, and where we are on some of the key internal metrics. So, in terms of last week, we actually ended up 0.1% on the week, so ultimately flat for the week in what was actually a very volatile trading period. Information technology finished flat on the week as well. Financials, in terms of sectors, were down 0.6%. The weaker sector was consumer discretionary, down 2.1%, and healthcare led the charge to the upside, gaining 3.9% on the week. So what does this tell us? Well, it suggests at this stage that we're seeing a bit of rotational trade in the market, and this isn't surprising given the fact that last week was ultimately an inside week in terms of the price action. In terms of the calendar for the week ahead, now that the government shutdown is over, we should start to get our first look at some of the data that we didn't receive during the shutdown period. That's going to principally start on Thursday with the September jobs data, so non-farm payrolls for September. We know that we're not going to see a release for October, and so this data may come in, whilst it might create some near-term volatility. I would anticipate that the market will take the view that it's relatively stale, and so expect price action around that to be relatively whipsawish in fashion. The main driver in terms of directional volatility, I think, for the weekend is going to come on Wednesday afternoon. We're going to get FOMC minutes, and we are then going to get NVIDIA earnings. I'll be doing a separate video with respect to that and to where I see the setups and trading opportunities on the NVIDIA release. But I would sense that if we're going to get a directional push, it's going to come Wednesday afternoon. We also have VIX expiration on Wednesday and monthly options expiration on Friday. So we could see a little bit of two-sided action to start the week, moving into a directional move into the back end of the week. In terms of where we are from a breadth perspective, we have seen that those stocks trading above their 200-day moving average has generally remained above the 50 mark for the past 2 weeks, which is a function of both the large liberation day move down, which obviously reduced the average, and the fact we've generally only been 2.5% from highs. So breadth is stable and trading above the pivotal 52.5 level in terms of the 200-day. In terms of the 20-day, so the shorter time frame, has remained relatively flat as well, even through the past week, with that spike higher after the 50-day washout the previous week. And so we're essentially back at the same point. We're trading 42 versus 44 as of the last update. So again, relatively flat at this stage. So what this, again, in terms of the internals and the breadth, whilst breadth is not fantastic, in terms of the breakdown with the S&P 500 and what's leading the overall move in the market, breadth remains relatively stable at this stage, and the trade appears to be rotational as opposed to heavy liquidation on all fronts. So just to keep that in mind as we head into this week, and that potential for an uptick in volatility into the middle to back end of the week. In terms of the market structure, we're one time framing lower on the daily time frame, close above 67.95 required to neutralize that. In terms of the weekly structure, we're trading in a balance zone now between 69.52 and 66.55, and the monthly structure remains one time framing higher, 65.91. I would note that the daily and weekly VWAPs are now bearish and coalescing around that 68.01 to 68.03 handle, and so we've tested into that area this morning. We've been rejected twice. If we can get up there a third or a fourth time and get a close above that level, I think that could add some positivity into the market early in the week. In terms of the gamma profile, keep an eye on this 6740 area. That's the gamma flip zone at the moment. And I'll talk about that in more detail in a second. So, like I say, in terms of the charts here on the weekly, we're still up at testing that major trend channel resistance. Have closed above it a couple of times, but we are seeing some sell side pressure at the moment. Like I say, on the weekly, we would now need to see a close through 16 zone 1 to flip the momentum bullish again to the upside and keep that 7047 target on the upside of the yearly R2 in play. On the daily time frame, again bearish at the moment, and if we don't start to see a close back through the 6900 level, this could actually be the initial formation for a wave 4 corrective move, which would target, if we think in terms of symmetry here, to the wave 2 pullback. Certainly the way it's forming is a potential three-way structure here. We can start to think about testing to the 6550, 6500 area before this corrective phase is over and set a base for that year-end Santa rally scenario to develop. So those are some levels to keep in mind in terms of the daily chart. So let's look at the intraday chart and get an idea of bull bear zone targets for the week ahead. So in terms of the bull bear zone, I'm going to lean again on 6820, 6830. This area has been pivotal with support and resistance on several occasions. And it coincides with daily projected range resistance today and the VWAP, the anchor weighted volume average price from all-time highs. So initially, 6740 is the support zone I'm going to be watching for any quick test into there as we start the cash session today. If that's rejected, I'm going to be targeting the test then of the bull bear zone, and then I'm going to be paying close attention to how price responds here. If we test and reject from that zone, then I'm going to be setting short positions, swing shorts, looking for a test of our weekly projected range support given implied volatility 6610. We also have that equality objective versus the larger swing structure coinciding there as well, 6602. And we have this high volume nose at just below 6590. So if we get rejected at the weekly bull bear zone, I'm going to try for a swing short to target this area into the middle to back end of the week, and then we'll see if buyers step back in. The alternative scenario is we get that test up into the weekly bull bear zone, we don't find sufficient supply there, and we start to grind things out to the upside. So we're going to close through there, get acceptance above. That will then target a move up to test weekly projected range resistance, which is at 6900 this week, given implied volatility. First port of call, though, will be 6870. 6870 is the point of control, the volume point of control so far for November. So I imagine a little bit of stickiness there. But as the weekly bull bear zone then acts as support again, we can think about testing 6900 as the weekly price objective, the initial weekly price objective. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.